I understood that grassroots financial movements could be extremely powerful, particularly narrative-driven movements, like we've seen in the silver movement. It never occurred to me that millions of mostly younger speculators could actually tighten the physical silver market. If you had asked me what the impact of this would have been 10 weeks ago, I would have said a pimple on an elephant's behind. The silver markets are very vast, they're very deep, they're much more liquid, they're much less contrived than the GameStop market. And a whole bunch of people trying the same game in the silver business will learn the same crushing lesson that the Hunts learned. What I sort of failed to grasp is that the Hunts were three guys using extraordinary leverage, and they didn't have any political power. A million people using no leverage. It's much more difficult to constrain the power of that movement. We watched, as money flowed into the Sprott Physical Silver Trust, we watched ourselves. I watched us clean out all the silver available in Ottawa, and then all the good delivery silver available in Toronto, and then I watched us tighten Chicago, and then I watched us tighten New York, to the extent that we had to institute sub-custodian arrangements with the Royal Canadian Mint and other custodians in places like London and Singapore. Now, I had understood that there was a shortage of silver in retail denominations, ounce, 10-ounce product, partially because the demand came in so suddenly that the refiners and the dealers couldn't keep up with it. And partly too, because the European refiners were shut down by COVID and they couldn't buy 1,000-ounce product and melt it down into retail product. But we began to experience difficulty in 1,000-ounce product, which was interesting. The second thing I learned is that when our product was originally constructed, it was constructed by Eric Sprott, really with his own portfolio in mind. He wanted a exchange-traded silver product that wouldn't have any fear of credit risk with counterparties. So he decided no delivery receipts, no deposit receipts, only physical silver in segregated storage. I thought at the time that this was a product that would be difficult to sell because it was a product that was conceived around a lack of trust in the financial services sector. And that lack of trust 10 years ago wasn't particularly evident, which is why the ETFs in the first 10 years of their existence trounced our product. But that lack of trust is manifest now. And you can see, if you look at a graph of the drawdown of silver on COMEX, despite the increase in the silver price, the lack or the decline in AUM in the silver ETFs, at the same time that Sprott has become, I would suggest, the largest buyer of physical silver on the planet for the last 12 months. The combination of a product that obviates the need for trust in the financial services system with a product that conveys some potential tax advantages to US holders has meant that this is a product that, let's just say Eric was prescient 10 or 12 years ago. He designed a product for himself that became precisely the product that the market believes it needs. There were some amusing moments early in PSLV because we're constrained from holding delivery receipts and depository receipts. I remember that at one point in time, we went on a public offering to raise, like $200 million or something. And we came home with $500 or $600 million. The bullion dealers, the banks, the desks were conditioned to expect $200 or $250 million in demand. And they told us that they could fill us in, half an hour or 45 minutes of responsible trading. When we came back with $500 or $600 million, that was the first time we ever tightened the market. And while we were smiling, we were scrambling. But what we experienced then was nothing like we've experienced in the last 12 months. With gold, you can buy gold in London, and gold's weight in bulk to value is fairly low. So you can throw it on a plane and ship it. With silver, because the weight to value is fairly high, Most often it's shipped by truck. And I think it's fair to say, I would leave it to Sprott to say, but I think we tightened up most of the silver supply in the part of the world that was within easy trucking distance of the Royal Canadian Mint, which is why we've had to establish, or why the Royal Canadian Mint has had to establish subcustodial relations in Europe and Asia, so that the silver can be, in other words, it can be good delivery in our physical possession with the sub-custodian of the Royal Canadian Mint before that silver can be flown from Asia to Canada for final storage in the Royal Canadian Mint. So yes, I would say we actually have tightened the silver market, and certainly regionally in North America, tightened it considerably. The value in gold and silver is very different. They are mediums of exchange that are simultaneously stores of value. But the truth is that they're both fringe assets. It's estimated that the market value of all savings of asset classes around the world, investment and savings products, exceeds $500 trillion. So the value of crypto, as an example, is now believed to be about $1.5 trillion. Think of crypto and gold and silver each as being as relevant to the total pool of savings and investment capital in the world as a pimple is to an elephant's behind. They're both tiny, tiny, tiny asset classes. It's interesting to note that for me, part of the attraction, probably with crypto, but also with gold and silver, has to do with the fact that they are such small asset classes. If you look at precious metals, currently precious metals in the US market comprise less than 0.5% of savings and investment products in the United States. The 3-decade mean is alleged to be between 1.5% and 2%. So gold doesn't need to win the fight against dollar-denominated conventional savings products. It just needs to lose the fight less badly. It just needs to regain its 3-decade mean, which I think it's going to do. I can't speak to what the market share of crypto will be. I will just say that the market shares of both relative to other asset classes are infinitesimal. And I don't think that the competition that gold and silver will face as stores of value will be with crypto. I think it'll be with the S&P 500. 40 years of bull markets have taught people that if you buy an index of the largest and most profitable companies in the world, companies with pricing power, that those companies are adequate stores of value. I'm concerned as to whether that or not that's true, given the valuation of those companies, and given the fact that some of that valuation is due to artificially low interest rates. That notwithstanding, I think that the competition that gold and silver faces is not from crypto, but rather from large cap equities on a global basis.